How many perfect setups have failed simply because the timing was wrong? The best price level entered at the wrong time often becomes the worst trade. Professional traders don't just study price. They study when price is most likely to move. That is where Gann Astro timing models begin to offer a different perspective. Imagine knowing the dates when the market is most likely to change before the move begins. This chart has already been analyzed using the Gann Astro Harmonic aspect model. Instead of reviewing the methodology again, we'll examine how the projected timing window aligns with the market's actual reaction. Let's now understand how these projected timing levels are calculated and applied to the chart. Before we begin, here is a financial disclaimer. This content is for educational purposes only and does not constitute financial advice. Trading involves risk, and you may lose capital. Always conduct your own research before making financial decisions. Trading futures and options involves substantial risk and is not suitable for every investor. On the 6th of July, 2026, the Sun reaches conjunction with Saturn. Now think about what that actually means. Two planets have been moving independently through the zodiac, each at its own speed, yet there comes a precise moment when both occupy exactly the same angular position. That moment is not estimated, and it is not approximate. It is defined entirely by geometry. Here I have used solar fire to get the time of aspects formation. You can use any astro software for this. Now here is where it becomes interesting. If that conjunction can be calculated with complete precision, then it must also occur at one exact moment in time. In this example, that moment occurs at 6:46 and 45 seconds in the morning. So rather than thinking about an entire day, we are now looking at a single mathematical coordinate within that day. Now ask yourself something. If geometry can identify an exact coordinate in time, what happens when that coordinate is projected onto a market chart? Does it become just another timestamp, or does the market begin responding differently as that moment is reached? Rather than answering the question immediately, let's look at what the market actually does. Notice where the vertical marker has been placed. It is positioned exactly at the moment when the conjunction becomes complete. Nothing has been adjusted to fit the chart afterward. The timing comes first, and only then do we observe how price behaves as the market reaches that coordinate. Now look carefully at the market before this timing is reached. Price is still following its existing path, and at this stage, there is very little to suggest that anything significant is about to happen. From the perspective of price alone, the market simply appears to be continuing its current movement. So the question remains the same. What happens when time reaches this calculated position? Now the conjunction becomes exact. The Sun and Saturn have reached the same angular position, and the equation is complete. Think about that for a moment. We have not calculated a price level. We have only calculated a moment in time. So now ask yourself, does the market continue behaving exactly the same, or does something begin to change? Here is where it becomes interesting. Shortly after the conjunction is completed, the market begins transitioning into a different phase. The previous movement starts losing strength, and price begins building structure in the opposite direction. The change does not happen because we expected it. It happens after the calculated timing has been reached. Notice how the movement developed from this point. Buyers gradually begin taking control, momentum starts expanding, and price continues advancing over the following sessions. The important observation is not the size of the move. The important observation is when that transition begins relative to the calculated timing. Now, think about what we have actually measured. We did not begin with a chart and search for a planetary event that matched it. We began with a conjunction that could be calculated independently, projected its exact completion time onto the chart, and only then observed how the market behaved around that coordinate. Now, think about the role of geometry in this entire process. The conjunction simply marks the moment when the angular separation between two planets becomes 0 degrees. That geometric condition can be calculated precisely, and once the calculation is complete, it provides a fixed coordinate in time. The market then tells us whether that coordinate carries significance. This is why timing should be viewed differently from price. Price tells us where the market is trading, but timing tells us when conditions may begin changing. When both are studied together, they create a framework where market structure and mathematical timing can be evaluated side by side rather than independently. Now let's look at another example. On the 1st of July, 2026, the Moon reaches opposition with Mercury. Think about what that represents. An opposition occurs when the angular separation between two planets reaches 180 degrees, placing them on opposite sides of the cycle. Just like the previous example, this is not an estimated event. It is a precise geometric relationship that can be calculated mathematically. Now here is where it becomes interesting. Once the opposition becomes exact, solar fire provides the precise moment when that angular relationship is completed. In this case, the exact timestamp is 7:50 minutes and 28 seconds in the morning. So once again, we are not working with a broad period during the day. We are working with one precise coordinate in time. If this angular relationship can be calculated with complete precision, what happens when that exact moment is projected onto a market chart? Does the market simply continue following its existing structure, or does that coordinate begin highlighting a period where market behavior starts changing? Rather than assuming the answer, let's simply observe what the market does. Here, a calculated timestamp has now been projected directly onto the 5-minute chart of the Nasdaq 100 E-mini futures. At this stage, nothing has been predicted. The only thing we know is that the Moon and Mercury reach exact opposition at this specific moment. Everything from this point forward depends entirely on how price behaves as the market reaches this calculated timing coordinate. Now look carefully at the structure before the timing coordinate is reached. The market has already been trending lower, and sellers still appear to have control. At this stage, there is no reason to assume that anything unusual is about to happen. The chart simply reflects the current market condition, while the calculated timing continues approaching. Now the opposition becomes exact. Think about that for a moment. The geometric relationship has now been completed, and the timing coordinate has been reached. The market does not know that we have drawn a vertical line on the chart. It simply continues responding to its own internal order flow. So the only question we should ask is whether market behavior begins changing after this moment. Notice what begins happening immediately after the calculated timing is reached. The market briefly attempts to stabilize, but that stability does not last very long. Selling pressure begins increasing, momentum starts expanding, and price quickly moves lower. The transition develops after the timing coordinate has been reached rather than before it. Now compare this with the previous example. The planetary aspect is different. The market is different. Even the overall structure is different. Yet the procedure remains exactly the same. First, identify the aspect. Then calculate its exact completion time. Project that timing onto the chart. Finally, observe how price responds once that coordinate is reached. Notice something else that is equally important. The timing coordinate did not tell us where to enter the market, and it did not predict the exact price where the move would begin. Instead, it identified a period where the probability of market expansion became higher. Price itself still provided the confirmation. So now think about what we have observed across both examples. Different harmonic aspects can produce different market responses, but the underlying principle never changes. Every planetary aspect represents a measurable geometric relationship. Every relationship becomes complete at an exact moment in time. Once that moment is projected onto the chart, it creates a mathematical timing coordinate that can be studied objectively. Rather than attempting to predict every movement, the objective is simply to identify moments where the market becomes more likely to transition from one phase into another. Now let's try a small exercise. The exact timestamp has already been provided, but the planetary aspect has been intentionally hidden. Open your preferred astrology software, enter the same date and time, and see if you can identify which planetary aspect becomes exact. Pause the video if you need to. Once you've found your answer, leave it in the comments below or send it to me on Telegram. You'll find my Telegram ID in the video description. Now think about this. Every planet has its own position within the zodiac. The Moon has one longitude. Mercury has another. The Sun has its own position, and so does every other planet. Now ask yourself something. If every planet is constantly moving, should we study each planet independently, or should we study how they move relative to one another? Let's simplify the problem. Imagine the Moon is at 90 degrees, while Mercury is at 120 degrees. A few hours later, both planets have moved. The Moon is now at 94 degrees, and Mercury is at 124 degrees. Notice something interesting. Both planets have changed position, yet the angular separation between them remains exactly 30 degrees. So although their individual longitudes continue changing, their geometric relationship has not changed at all. Now we can express that relationship mathematically. Instead of studying one planetary longitude at a time, we simply measure the angular difference between two planets. We write it as delta theta equals the absolute value of theta 1 minus theta 2. This single equation removes the individual positions and leaves us with only the relationship between them. So, the quantity we are actually measuring is not planetary position. It is angular separation. Now here is where it becomes interesting. As both planets continue moving, this angular separation is constantly changing. Sometimes it becomes 30 degrees, sometimes 60 degrees, sometimes 90 degrees, 120 degrees, or 180 degrees. These are not random numbers. They are specific geometric relationships that occur naturally as both planets continue moving through their cycles. If every harmonic aspect is nothing more than a specific angular separation between two moving planets, and planetary motion can be calculated with precision, then shouldn't the exact moment when these angles occur also be calculable? That is precisely why we study aspects rather than individual planetary positions. We are not searching for where a planet is. We are measuring when a specific geometric relationship becomes complete. Now that we have understood how harmonic aspects can be used to identify potential timing coordinates, let's move on to another technique that follows a completely different approach. This method is called the Gann Astro Planetary Longitude mapping method. I have already explained the complete mathematical foundation and calculation process of this method in my previous videos. So, if you would like a deeper understanding of the underlying theory, I highly recommend watching those lessons first before continuing with this example. Unlike the previous method, we are no longer waiting for two planets to form a specific angular relationship with each other. Instead, we begin with a single astronomical reference point. From that reference, we simply observe how one planet progresses through its own longitude over time. The concept is actually quite straightforward. First, we select a reference swing high or swing low and record the planet's longitude at that moment. Next, we measure the planet's angular progression from that reference longitude until it reaches 90 degrees, 180 degrees, 270 degrees, and 360 degrees. Finally, we project those calculated timing coordinates onto the market chart and observe how price behaves as each angular milestone is reached. Now, rather than discussing the theory again, let's apply this method step by step using a real example on crude oil. By following the complete calculation process from the reference point to the projected timing coordinates, you'll see exactly how planetary longitude is transformed into a practical market timing model. The first step is to determine our astronomical reference. Inside the Gann Astro Planetary Longitude calculator, I have selected the moon as the planet that will be tracked throughout this example. Now notice the highlighted row. This date becomes our starting coordinate. At this moment, the moon occupies a precise longitude, which serves as our reference for all future calculations. At this stage, we are not attempting to forecast price. Our objective is simply to establish the initial astronomical coordinate from which the planet's angular progression will be measured. The calculator you see here is one of the proprietary tools I use in my research and private mentorship. It is not publicly available and is provided only to serious traders who wish to study these methods in greater depth. If you're interested in learning more, you'll find the contact details in the description below. Now let's move to the crude oil chart. This vertical line represents the exact date we selected inside the software. Everything before this point simply provides market context, while our actual calculation begins here. Notice the labels on the chart. This is our reference time, and this is our reference angle. At this moment, the moon's longitude becomes theta naught. Because this is our starting point, the angular displacement is 0 degrees. Nothing has been measured yet. Every future longitude will now be compared against this exact astronomical coordinate. Now watch what happens next. Instead of searching randomly through the calendar, we return to the software and continue following the moon's longitude. Eventually, the highlighted longitude reaches approximately 90 degrees away from our original reference. Mathematically, we can express this as the current longitude minus the reference longitude equals 90 degrees. Nothing about the market has been used to determine this date. The calculation is entirely astronomical. Only after locating this 90-degree progression do we project that date back onto the crude oil chart. Now ask yourself a simple question. Does the market acknowledge this astronomical coordinate? Look carefully at the candles surrounding the projected date. Notice how selling pressure begins to weaken. Instead of continuing aggressively lower, the market starts rejecting lower prices. The long lower shadow immediately attracts attention, and buyers begin responding near this projected longitude. Now, this does not automatically mean that every 90-degree progression produces an immediate reversal. That is not what this method claims. Instead, what we are observing is that the astronomical coordinate identifies a location where market behavior begins to change. Rather than predicting price, it predicts where probability starts to shift. Now we continue the exact same process. There is no new calculation and no new model. We simply continue measuring the moon's progression from the original reference longitude. Eventually, the accumulated displacement reaches 180 degrees. Now study the market carefully. Instead of creating another lower low, crude oil begins forming a higher low. That single observation tells us something important. Buying pressure is becoming stronger than it was previously. Notice how sellers attempt to continue lower. However, the market refuses to extend the previous weakness. This is exactly why we map planetary longitude. The objective is not simply to find turning points. The objective is to observe whether market structure begins changing near these astronomical coordinates. Let's continue following the moon. From 0 degrees to 90, then to 180, and now to 270 degrees. Nothing changes in our calculation. The only variable changing is the moon's longitude. This consistency is extremely important because it removes subjective interpretation. Every projected date comes directly from measurable astronomical motion. Now, look at the projected date. Notice what happens immediately afterward. The market attempts to move higher. However, buyers fail to maintain control. Selling pressure quickly returns, and the candles begin rejecting higher prices, producing a bearish response. Again, we're not claiming that the moon causes the decline. We are simply observing that this longitude progression coincides with another meaningful structural reaction in the market. Finally, the moon completes a full angular cycle relative to our original reference. The total displacement now equals 360 degrees. Mathematically, the planet has returned to the same angular orientation measured from our starting longitude. Although the moon has continued traveling through space, the relative angular displacement has completed one full cycle. Now let's see whether the market responds once again. Look closely at the candles surrounding this coordinate. The market continues declining into the projected date. However, selling pressure begins losing momentum. Lower prices are rejected, and buyers gradually return to the market. Instead of accelerating lower, price begins stabilizing. This creates another meaningful reaction occurring near one complete longitude cycle. Now, continue watching the candles after the projected coordinate. Notice that the initial rejection is not immediately forgotten. Buying pressure gradually strengthens, and the market begins pushing upward over the following sessions. This is an important distinction. Our longitude coordinate identifies where probability begins changing. Confirmation still comes from price itself. The astronomical calculation provides timing, while the market confirms direction. Now step back and look at the entire chart. From 0 degrees to 90 degrees, then to 180 degrees, 270 degrees, and finally 360 degrees, every vertical line originated from one simple calculation. Measure the moon's longitude relative to the original reference. Nothing more. No indicators, no oscillators, and no moving averages. Only astronomical longitude mapped directly onto market time. It is important to understand what this model is really measuring. We are not measuring price, nor are we measuring volatility. We are measuring the angular progression of a celestial body through time. Those angular coordinates are then projected onto the market to identify periods where behavior becomes statistically more interesting. Sometimes the market reverses, sometimes it accelerates, and sometimes it simply pauses. The value of the method is that it provides objective timing coordinates before the market itself reveals the outcome. Now, let's move to the next example. This time we will apply exactly the same method to Bitcoin on the daily time frame. Before opening the chart, we first return to the planetary longitude calculator. Notice the highlighted row inside the software. This is the date we have selected as our starting reference. At this exact moment, the moon occupies a specific longitude within its orbital cycle. Instead of continuously tracking its absolute longitude, we freeze this value and define it as our reference longitude. Everything that follows will now be measured relative to this single astronomical coordinate. Think of this as establishing the origin of our angular measurement system. Once the reference is fixed, every future longitude becomes easy to calculate. Now we project that same date onto the Bitcoin chart. Notice the vertical line labeled reference point. Everything before this point simply provides market context, while our actual calculation begins here. At this exact moment, the moon's longitude becomes theta naught. Because this is our starting coordinate, the angular displacement is 0 degrees. Also notice the equations on the left side of the chart. They describe exactly what we are measuring. Theta naught represents the reference longitude. Omega represents the moon's angular velocity. Theta, as a function of time, describes the moon's longitude as it continues moving through space, and delta theta measures the difference between the current longitude and our original reference longitude. These equations remain unchanged throughout the entire example. Now let's continue following the moon. Inside the software, the longitude continues increasing day by day. Eventually, the angular displacement reaches approximately 90 degrees from the original reference longitude. Notice that this date is produced entirely by the astronomical calculation. At this stage, we have not looked at the Bitcoin chart. We're simply identifying the moment when the moon has progressed 90 degrees from theta naught. Once that condition is satisfied, we can project the timing coordinate onto the market. Now look carefully at the projected timing coordinate. The red arrow highlights the candle that corresponds to the calculated 90-degree progression. Ask yourself a simple question: what is the market doing at this exact moment? Notice how bullish momentum begins slowing. The market attempts to continue higher, but buyers fail to maintain control. Soon afterwards, sellers begin pushing the market lower. The important point here is that the date was calculated first, while the market reaction was observed afterwards. Now we continue exactly the same process. We do not change the reference point, and we do not change the formula. The only thing changing is the moon's longitude. Eventually, the software identifies another important angular milestone. This time, the displacement reaches 180 degrees from the original reference longitude. Now let's project this timing coordinate onto Bitcoin. Once again, the projected timing coordinate aligns with an important area of market activity. Notice what happens after price reaches this location. Instead of immediately reversing upward, the market continues respecting the prevailing bearish structure. This is an important lesson. Planetary longitude mapping does not guarantee that every coordinate produces a reversal. Sometimes the market reverses, sometimes it accelerates, and sometimes it simply continues its existing trend. The value lies in identifying moments where market behavior deserves closer attention. Now the moon continues progressing through its orbit. The software keeps measuring the angular displacement from exactly the same reference longitude. Eventually, another milestone is reached. The displacement now equals 270 degrees. Again, nothing about this calculation depends on price. It is determined entirely from planetary motion. Now, let's observe the market. Study the candles around the projected coordinate. Notice the strong upward candle immediately before the timing window. At first glance, it appears that buyers may be taking control. However, the following candle rejects those higher prices almost immediately. The market produces another bearish rejection. Instead of continuing upward, selling pressure returns. This is another example of the market responding near a mathematically calculated timing coordinate. Now we continue tracking the moon until it completes one full revolution relative to the original reference longitude. The total angular displacement now reaches approximately 360 degrees. A complete cycle has now been completed. The moon has returned to the same angular orientation measured from our starting coordinate. Now let's see whether Bitcoin responds once again. Look carefully at the candles surrounding the projected date. Once again, the market rejects higher prices. Notice the long upper wick forming near the calculated timing coordinate. Buyers attempt to continue the rally. However, that strength is quickly absorbed by sellers. Another bearish rejection develops. Again, the astronomical timing was calculated first, and the market behavior was simply observed afterwards. Now step back and observe the entire chart. Beginning with one reference longitude, we projected four separate timing coordinates: 90 degrees, 180 degrees, 270 degrees, and finally 360 degrees. Each coordinate originated from the same mathematical calculation. The only thing changing throughout the process was the moon's angular position. Now ask yourself another question. Did every longitude produce exactly the same market behavior? The answer is no. Some coordinates produced bearish rejection, while others aligned with continuation. This is exactly what we should expect. The purpose of planetary longitude mapping is not to force identical outcomes. Its purpose is to identify objective timing windows where important structural decisions become more likely. For a moment, forget everything we've discussed so far and think about how most traders approach the market. When they open a chart, what is the very first question they ask? Usually, it is, where will price go next? Will Bitcoin reach 80,000? Will gold reach 3,500? Will the market make a new high? Almost every indicator, trading strategy, and forecasting model is built around trying to answer that single question. In other words, traditional market analysis treats price as the unknown variable, while everything else is simply an attempt to estimate where price might move next. But what if we asked a completely different question? Instead of asking where price will go, what if we first asked when the market is most likely to become important? That small shift completely transforms the way we analyze financial markets. Now look at any financial chart. Notice the two axes. The horizontal axis represents time, while the vertical axis represents price. Every candle on the chart is simply the intersection of these two coordinates. As traders, we cannot directly control either one. However, most analytical methods choose to focus almost entirely on the vertical axis. Support and resistance, trend lines, moving averages, Fibonacci levels, supply and demand, all of these techniques attempt to understand how price moves vertically. Very little attention is given to the horizontal axis itself. Time is usually treated as nothing more than a sequence of calendar days. But should it be? Now think carefully about this. We often say, 8 days have passed. But what does that actually tell us? Does 8 calendar days tell us anything about planetary motion? Does it explain how much the moon has traveled or describe the geometry of the solar system? Not at all. A calendar is simply a human method for organizing dates. Nature does not measure time using Mondays, Tuesdays, or Fridays. Nature measures motion. Planets continue moving regardless of what we decide to call the date. Perhaps, then, calendar time is not the only way to measure the passage of time. Now, imagine replacing the calendar with something completely different. Instead of saying, today is the 20th of February, suppose we say, today the moon has traveled 180 degrees from the reference longitude. Notice what has changed. The market chart is still exactly the same. Price has not changed, and the candles have not changed. Only the way we describe time has changed. Instead of measuring time with a calendar, we are measuring it using planetary motion. In other words, we have transformed calendar time into angular time. That is the central idea behind the planetary longitude mapping method. Now, something interesting happens. Once astronomical time has been calculated, we stop asking, where will price go? Instead, we ask, what does price do when this calculated timing coordinate arrives? Do buyers become stronger? Do sellers become stronger? Does volatility increase? Does the market continue its existing trend? Price is no longer something we're trying to calculate. Instead, it becomes something we observe. The calculation has already been completed, and only the market's response remains unknown. This distinction is extremely important. Most trading methods mix calculation and observation together. They first observe price, then calculate indicators from price, and finally use those indicators to predict future price. Everything begins with the chart itself. This method follows the opposite sequence. First, we calculate the astronomical timing coordinate. That calculation is completely independent of the market. Only after the timing coordinate has been established do we open the chart and ask, how did the market respond? Notice the difference. The calculation is objective, while the observation comes afterward. These two steps remain completely separate. This is why I often say that this method is not trying to predict price. Instead, it is trying to identify when price deserves our attention. Those are two completely different objectives. A calculated timing coordinate does not tell us whether the market must rise or fall. Instead, it simply tells us, pay attention here. From that point onward, we allow price itself to reveal the direction. The astronomical model provides the timing, while the market provides the confirmation. When both pieces of information are combined, we obtain a framework that is fundamentally different from traditional price-only analysis. So, why don't we use price as the independent variable? Because price is the result of countless interacting forces. It reflects what the market has already done rather than providing an independent measurement. This method begins somewhere else. It starts with an independent astronomical calculation that does not depend on candles, indicators, or market structure. Only after that calculation is complete do we examine price. By changing the independent variable from price to astronomical time, we also change the entire perspective of market analysis. We stop asking, where will price go? And instead begin asking, when does the market become statistically interesting enough to deserve our attention? That single shift in perspective is what separates the Gann Astro Planetary Longitude mapping method from conventional forms of technical analysis. Now, let's start with a simple question. When you look at a chart and see price moving from 100 to 200, what do you actually think is happening? Most traders immediately assume that price has simply increased by 100 units, and that this increase represents a straightforward, linear movement. But pause for a moment and ask yourself, does the market really move in straight lines, or are we just interpreting it that way because of how charts are drawn? Now, think about this more carefully. If price moves from 100 to 400, that is a 300-point move. But is that really 3 times stronger than a move from 100 to 200? Or is there a deeper structure hidden underneath that we are not seeing? This is where the idea of nonlinearity begins. To uncover this hidden structure, we introduce the square root. This is not random. It is directly aligned with the geometric thinking of W.D. Gann. When you take the square root of price, you are no longer observing raw numerical change. You are transforming price into its geometric scale. For example, the square root of 100 is 10, and the square root of 400 is 20. So even though price increased by 300 points, geometrically it only doubled. Now pause and reflect on that. What looked like a massive move on a chart is actually a proportional expansion when viewed through the correct lens. This is the first major shift from absolute movement to structural movement. But we are not done yet. Let's introduce another layer. Suppose you're analyzing different markets like gold, forex, and indices. Each of them has completely different price ranges. So if you apply square root directly, you still cannot compare them properly. This creates inconsistency, and inconsistency leads to confusion. So now ask yourself, how do we make all markets comparable? The answer is by introducing a base price. This base is not arbitrary. It is usually a significant point, such as a swing low or a swing high. By dividing the current price by this base, we convert everything into a ratio. Now, instead of looking at price, we're looking at how far price has moved relative to its origin. Let's take an example. If price moves from 100 to 121, then the ratio becomes 1.21. Now this number is dimensionless. It does not matter whether it is gold or euro dollar. The structure is the same. This is where normalization happens. Now apply the square root to this ratio. The square root of 1.21 becomes 1.1. What does this mean? It means price has expanded by 10% in geometric terms from its base. Notice how clean and structured this becomes compared to raw price movement. Next step, we subtract 1. Why do we do that? Because we want to center the system. When price equals the base, the ratio is 1, the square root is 1, and subtracting 1 gives us 0. This creates a true origin point, allowing us to measure displacement from equilibrium. Now comes the transformation that changes everything. Instead of keeping this as a decimal, we convert it into an angle. Why angle? Because markets behave in cycles, and cycles are best represented in circular form. This is a key insight from W.D. Gann. Price can be mapped onto a rotational system. So we multiply by 180. This converts our geometric displacement into degrees. Suddenly, price is no longer just a value. It becomes a position on a circle. A move is no longer measured in points, but in angular progression. Take a moment to think about the shift that just happened. You went from looking at price as a straight line to understanding it as rotation. This alone changes how you interpret every movement on the chart. Now we apply modulo 360. This ensures that the angle always remains within a full cycle. Because markets do not move infinitely in one direction, they rotate, complete cycles, and then begin again. This step keeps everything inside a repeating structure. Now let's connect this back to trading. Once you convert price into an angle, certain zones begin to carry meaning. Around 90 degrees, markets often react. Around 180 degrees, they tend to encounter strong opposition or transition. Around 270 degrees, movement often stretches toward imbalance. And near 360 degrees, a full cycle is typically completed. At this stage, the angle is not a signal by itself. It defines location within the cycle. When price approaches these zones, it indicates that the market is entering an area where behavior often changes. The role of a trader is to observe how price responds at these locations. This means you are not reacting randomly to price changes. You are identifying where the market is within a structured cycle, and then using price action to confirm decisions. The value of this method lies in providing a consistent framework. Instead of treating every movement as isolated, it allows you to interpret price as part of a repeating geometric structure. This shifts the focus from measuring how far price has moved to understanding where it is positioned within its cycle. Now, let's apply this method on a real market example to understand how price and time interact within a structured cycle. In this case, we are analyzing a larger swing move rather than a small intraday fluctuation because meaningful calculations require meaningful structure. We begin by defining the base price. Here, the base is selected as the major swing low at 5,086.2. Next, we identify the price we want to evaluate. In this case, the current price or recent high is around 6,143.1. This gives us the full range of movement from the base to the top of the move. Now, instead of measuring this move in points, we apply the transformation. The first step is to convert price into a ratio by dividing the current price by the base. This shifts the perspective from absolute movement to relative expansion. When we calculate this ratio, we get approximately 1.2077. This means price is expanded by about 20.7% relative to its base, but this is still not the final form we need. To bring this into geometric space, we take the square root of the ratio. This step compresses the movement and reveals its structural proportion. The result comes to approximately 1.099. Next, we subtract 1 from this value. This centers the system so that the base corresponds to 0. The result is approximately 0.099, which represents the geometric displacement from the origin. Now we convert this displacement into an angle by multiplying by 180. This step transforms price from a linear value into a position within a circular framework. After completing this transformation, we find that the price angle is approximately 18 degrees. This tells us that despite the visible size of the move, price has only progressed a small distance within its full 360-degree cycle. At this point, if we only look at price, the interpretation would be straightforward. An 18-degree move suggests that the market is still in the early stage of its cycle, far from key structural levels such as 90 degrees or 180 degrees. However, this is where time becomes essential. Price alone does not define market structure. Time must also be considered to understand whether the move is balanced. In this example, we measure the time taken for this move, which is approximately 140 bars. This duration is significant because it is close to a full 144-bar cycle, which is commonly used in cyclical analysis. Now we convert time in angular form. By mapping 140 bars into a 360-degree cycle, we find that time has progressed to approximately 350 degrees, which is near completion of a full cycle. This creates a clear contrast. While price is only at 18 degrees, time is almost at 360 degrees. This indicates a strong imbalance between price and time. When time completes a cycle, but price does not expand proportionally, the market enters a state of imbalance. This imbalance cannot sustain indefinitely and usually resolves through adjustment. The adjustment typically comes in the form of a correction or reversal. The market either needs to reduce time pressure or realign price with a completed cycle. If we observe the chart at this stage, we can see that shortly after reaching this point, the market begins to decline. This movement is not random. It is a response to the imbalance between time and price. This example shows an important principle. A reversal does not always occur because price reaches a visible resistance level. In many cases, it occurs because the underlying structure between time and price becomes misaligned.